We'll cut across to the Piramal presser. Ajay Piramal speaking right now about a strategic business initiative.
So what can you do that you will be the 81st? And this is where, when we went into one more level of detail, we found that in the housing finance companies today, only 10 have assets under management which are above 10,000 crores. And if you go down to one level below, there are only 16 companies which have assets under management of 5,000 crores. And therefore it's a highly fragmented industry. And actually, if you add to this, this is not only pure consumer housing loans, but if you add LAP, which people count, and construction finance, very often they count in this, then the real housing finance loans to consumers is actually very, very small. So in such a large country like ours, and where levels of income are going up, where affordable housing is becoming the mantra of the day, and where aspirations of people are going up, to have such a small loan book is also means that there is an opportunity that exists. The second myth that we all had is that housing finance is a business where a housing company gives a loan directly to an individual customer. So it's a B2C business. But as I said, we have close relationships with more than 100 plus developers. And they had been persuading us in the last few years that since you are funding so much of real estate, you ought to be also funding housing loans. Because housing finance is not a B2C business. Basically, it is a B, which is the lender, which is the finance company, to B, which is the developer, to C, which is the customer. So it's a B to B to C business. And why do we say that? As you know, and I know many of you must have taken loans or must have invested in property, you start paying installments for any property that you buy. At various stages of completion of a project, you pay in installments. And therefore, it is very important that when the installment is due, the lender, the finance company, the bank gives it to you, the consumer, in time. But what we realized is, and that's what the developers' feedback was, that it's not so easy to get funds at the right time with many of these 80 odd housing finance companies. There are a few who of course understand the business, but the majority of them don't understand real estate, and hence it takes much longer for them to give, and therefore it restricts the loans. So that was the reason why a lot of developers were persuading us to get into this business of housing finance. And that is the reason why we decided to get into it. How will we distinguish ourselves from the 80 odd companies that are there already in housing finance? First of all, as I said, it's not a B2C business, it's a B2B2C. And the strong partnership that we have with developers is the one which is going to be a unique edge that we have, and not many would have that. Secondly, I think we have been, one of the reasons why we have become the second largest player in the real estate space in terms of lending, and the reason why on a run rate basis, on a monthly disbursement basis, we are the largest player in giving disbursements, is because we understand what the customer wants, and we are always one step ahead of the customer, of meeting the customer requirements. And that is why, again, we are getting unique products that we are doing. Our team has been working to see that there are unique products that we can offer our partners. We are also looking at funding not only salaried class, but also the self-employed. And why do you think people, not many go into self-employed? Because again,